Remove every oscillator from your chart right now. RSI, MACD, Stochastic, they have become the trapping tools of smart money. They react to fakeouts and lead you straight into liquidity grabs. But there is a free indicator on TradingView that smart money cannot fake, and most retail traders have never heard of it. Let's go to the charts right away. Here is EURUSD on the 4-hour chart. The indicator is reading plus 2.1. That means price has drifted more than double its average distance away from normal. In statistics, that is considered suspicious. It means the asset is truly overbought and will come back down. Watch what happens next. Now here is BTCUSD. Same indicator, reading minus 2.3. Price is stretched far below normal. And there it goes. 2 charts, 2 extremes, 2 reversals. This is not a coincidence. This is statistics doing what statistics do. The indicator is called Rolling Z-Score Trend by QuantAlgo, and it's free on TradingView. It has built-in modes for scalpers, swing traders, and trend followers, and almost nobody has made a proper strategy video about it. We are going to change that right now. Most indicators use arbitrary numbers. RSI says overbought at 70. Why 70? Nobody knows. It is just a line someone picked decades ago. The Z-score is different. It measures how far the current price is from its rolling average. That is not arbitrary. That is math. Here's how to read it. 0 means price is at its average. Perfectly normal, nothing interesting. Plus 1 means price is 1 standard deviation above average. Slightly elevated but not unusual. Plus 2, now you are in rare territory. Statistically, price spends less than 5% of its time this far from the average. It means this situation is temporary and price will fall back. When you see plus 2, the rubber band is stretched. It always snaps. Same logic on the downside. Minus 2 means price is unusually far below average. Oversold in a way that actually means something. And those green and red columns underneath, those show momentum. Green columns mean the Z-score is accelerating upward. Red means it is accelerating downward. When the columns change color, momentum is shifting. That is your early warning signal. Here's what makes this indicator different from every other Z-score tool on TradingView. It comes with pre-configured modes. Mode 1, scalping. Fast, responsive, designed for 1 to 15-minute charts. More signals, more noise, but catches quick moves. Mode 2, swing trading. Balanced for 1 hour to daily charts. Fewer signals, higher quality. Mode 3, trend. Following, maximum smoothing. Daily and weekly charts, only flags the big moves. Same chart, same pair. 3 completely different readings. You do not need to waste hours tweaking settings. Just pick the mode that matches how you trade. Here is the trading system. Just 2 rules. Rule 1, wait for the Z-score to reach plus 2 or minus 2. This is your the market has gone too far signal. Do not trade at plus 1. Do not trade at 0, only at the extremes. Rule 2, wait for the momentum columns to flip color. Let me show you this on a real chart. EURUSD, 1-hour chart, swing mode. Z-score climbs to plus 2.2 over 3 days. Green columns the entire way up. Then right here, the first red column appears. Momentum is shifting. Entry on the next candle open. Stop loss above the high of the extreme candle. 12 pips of risk. Target is the 0 line, which is 41 pips away. That is a 3.4 to 1 reward to risk ratio. Price pulls back to the 0 line within 2 days. Clean trade. Now a sell example. BTCUSD, 4-hour chart. Z-score drops to minus 2.4. Red columns the whole way down. Then the first green column appears. Entry on the next candle. Stop below the low. Target the 0 line. $1,200 move on Bitcoin with a 2.8 to 1 ratio. Now one thing to keep in mind with setups this tight, that 12 pip stop only works if your broker is not adding 2 pips of spread on top, because that turns 12 pips of risk into 14, and your 3.4 to 1 ratio drops to 2.9. On small accounts, that difference compounds fast. We tested a bunch of brokers for exactly this kind of strategy. The one that gave us the tightest spreads consistently is linked in the description. Alright, so the strategy works in ranges, but what about trends? Every indicator has a weakness. Here's the Z-scores. Gold, daily chart, early 2026. Z-score hits plus 2. You are thinking reversal, but gold does not care about your statistics. It keeps going. Plus 2.5, plus 2.8, plus 3.1. The Z-score stays extreme for weeks. If you short it at plus 2, you are underwater. This is the trend trap. In a powerful trend, price can stay statistically extreme far longer than your account can stay solvent. The fix? Context. Before you trade a Z-score extreme, zoom out. Is the market in a range or a trend? If it is ranging, Z-score reversals work beautifully. If it is trending hard, do not trade against the trend. Instead, use the Z-score as a pullback filter. Wait for the Z-score to drop back to 0 or below during an uptrend, then enter with the trend. That distinction, reversal in ranges, pullbacks and trends, is the difference between this being a good indicator and a great strategy. Here is exactly how to set this up in 60 seconds. Open TradingView, click Indicators, search Rolling Z-Score Trend Quantity. quant algo. Add it. Click the gear icon, pick your mode. Scalping for 1 to 15-minute charts. Swing for 1 hour to daily. Trend following for daily and weekly. The thresholds default to 1.5. Change them to 2.0 for fewer but higher quality signals. That is it. You are ready. RSI tells you overbought at an arbitrary line. The Z-score tells you exactly how far price has drifted from normal. That's it for today. Smash that like button and subscribe if you need more videos like these. And if you want to learn about a highly accurate auto SMC indicator, click the video on left, or for honest broker reviews, check the playlist on the right.